Hello and welcome to Looking at the Markets with David Modell. I'm going to tell you three things that I look for when I am picking stocks to intraday trade. These are for day trading. And before I get started, just want to let you know that if you want more personalized help, if you want coaching, I do offer that. You can email me for the coaching if you want more help. My email address is right there on the screen, davidmodell@gmail.com. So I'm going to go on over to Yahoo Finance, but you might use Google Finance or Morningstar or whatever you like. And what I like to look for in a good stock for intraday trading, first of all, it's got to have plenty of volume. All right, we're talking about daily volume. And so you can go to Yahoo Finance, I typed in Apple, you could type in whatever one you'd like and whatever stock you'd like, and then go down past the chart and you can look at volume and average volume. Now that's per day. So this was today's volume, 42 million or so shares traded today. And then on the average day, that's average volume. On the average day, 50 million. So that's plenty, okay? If it's in the millions, that's great. It doesn't have to be in the millions, but you don't want it to be like, 5 shares traded a day or something like that, all right? Because you're going to be doing a lot of trading of a stock if you intraday trade it multiple times a day, every day. All right. And so you want to be able to get in and out of your trades easily. You want them to get filled or executed quickly and easily and at a favorable or good price. So if there's not much volume, you might not be able to buy or sell it at all, or it might take a long time. You might not get a favorable price. The bid and ask spread might be wide. You don't want that because you're not going to get a good price. All right. Both when you buy and sell it, you're not going to get a good price. So look for plenty of volume. Doesn't have to be in the millions, but you want it to be decent. So that's one thing I look for. All right, if the volume's not there, probably not a great candidate for intraday trading. Then I check first. First I do that. Then I'll check the price. Okay, let's take Apple. It's around $266 per share, and then I look at the 52-week low. All right, Yahoo Finance has it. It has the 52-week range. So in the past year, Apple stock has been as high as $327 and change, but I'm looking for the low. So the 52-week low was around $170, okay? And I usually don't want to, and there are exceptions to all these things, but usually you might not want to consider intraday trading a stock that's really close to the 52-week low. All right, that's an out of favor stock. Now, if you're a long-term buy and hold type of investor, or maybe even a swing trader who holds for weeks, months, that kind of thing, then you might want to buy something near the 52-week low if it's a really great company that's just out of favor for now, but you think maybe it's going to come back soon, maybe in a few days or weeks or months, that kind of thing. That's one thing. Even then, you got to be careful. You don't always want to do that. But it might make sense if you're long-term or medium-term. But if you're a very short-term trader, then if a stock is really close to the 52-week low, the bottom end of the 52-week range, that is an out-of-favor stock, and it's possible that sentiment is against it, at least at the moment. And so every time you go to buy it, it might get dumped, and you might end up getting stopped out a lot, or at least more than you want to. All right, so let's check Apple. So let's see, the 52-week range, the low was around $170 a share, and right now it's $266. All right, so it's actually closer. If the high is $327, it's about in the middle, maybe a little bit closer to the high than the low. So at least it's not near 170. So it's not near the 52-week low. That's the important thing, all right? That's just me trying to do the math in my head. You can use a calculator if you want to see if it's closer to the high or the low. But if it's really close to the 52-week low, then probably, or maybe not such a great candidate, all right? Again, there are exceptions. And then the third thing I look at is you can go on, here's tradingview.com, but you can use whatever you like. For the chart, And then I want to look for rolling hills. That's a funny name, right? Rolling hills. That's what I call it. I'm sure other people thought of that also, but that name. But I call them rolling hills, all right? Because that makes it easier to profit in many different trading systems. For intraday trading, all right, because you can get in and then take a profit when it's high, and then you can get out, all right, and then you can get in again at the bottom, and then take a profit when it's high, and then get out, and then get in at the bottom again. So you can rinse and repeat, right? You can make money over and over. And if you play the short side of it, which is risky, it's not for a lot of people. Definitely not for beginners going short. I usually don't recommend it. Maybe there are exceptions to that, but if you play the long and short side, then if you get those rolling hills and valleys, I guess you could say, then you could go long at the bottom and then go short at the top and then go long, and so you can make money, in both directions. You can make money going short and then make money going long and then make money going short and then long, short, long, and so on. All right. So this is the type of chart you want to look at. And so you can go, you can scroll to the left. You can look at the historical price movements day after day, minute after minute, and see if it has those rolling hills. It doesn't have to have it all the time. It's probably not going to have it all the time. It's not picture perfect always. But if you have a stock that doesn't often look like this, if it's just down, down, down without any hills or not too many hills, or just up, up, up in a way, then that might not be a great candidate for, long and short trading, or even just for long trading, because it's hard to rinse and repeat that if it's just totally going in one direction, especially if it's only going down. That's not usually good for intraday trading unless you're going short. All right. So that's a pattern I like to look for, and some stocks seem to be better at this than others. And this is for trading systems that have this kind of thing. Like I put 2 moving averages up there, and so with a moving average crossover strategy, you can play those rolling hills, or with the RSI, if you're let's say 30 and 70 is oversold and overbought, and so you can buy when it's oversold, and then sell it or short it when it's overbought, rinse and repeat. Still kind of a rolling hills kind of thing with the RSI or stochastics, whatever it is, CCI, commodity channel index, whatever, rolling hills kind of indicator that you're using, or 2 moving averages, that kind of thing. All right. So there you go. Those are 3 things that I would look for. Not the only things necessarily, but I wanted to limit it to 3 for the sake of this video. Thank you so much for watching and listening. If you want more help, then you can email me for coaching. I do offer that, davidmodell@gmail.com. And hope to talk to you again soon. Thanks a lot.